Well, a new report by RBC says sky-high home prices and rising interest rates are pummeling housing affordability across Canada, and the situation in Vancouver, Toronto, and Victoria has reached extreme levels. Joining me now is Robert Hogue, Assistant Chief Economist at RBC and author of the report. Thanks so much for joining us.
Well, good afternoon.
So I wonder if first you could just break down this affordability picture as it is at this moment.
Yeah, well, of course, this is a surprise to no one that affordability has significantly deteriorated over the past year. In some cases, in some markets across Canada, quite a long time. But most recently, what we saw is that the rise in interest rate now is the main factor contributing to this deterioration or this increase in ownership costs. And that's on top now on more working from very high levels of home prices that are just increasing those monthly mortgage payments. So they're taking a higher share of household income. And now to the point that on a nationwide basis, if someone had bought in the first quarter of this year at the current prices and interest rate, they would have had to pay about 54% of their income if they're in the middle of the income distribution. So this is the worst level since the middle of the 1990. So that's the worst level of affordability nationwide in a generation.
So over 50% if you're looking at the sort of national average house price, but prices in some cities like Toronto, Vancouver are far higher. What is affordability like in those cities?
Right, and those were expensive cities to begin with, and unaffordable markets before the pandemic. But those numbers, for example, in the Vancouver, it's 82%. That measure that we have. In Toronto's case, it's almost 75%, and in Victoria, 60.6%. So clearly, for an average household in Canada, in those markets, owning a typical home is out of reach.
It doesn't even seem like it should be an affordability index at this point, like that 75% not affordable whatsoever. So interest rates have gone up. However, we're expecting them to keep climbing. And you mentioned just what a difference a couple of months makes with the rate hikes that we've seen so far. Where do you see affordability going from here?
Right, and this is like the even worse news that now with the interest rate continuing to rise, in our view, the Bank of Canada is going to go quite aggressively still in the coming months in raising its overnight rate all the way to 2.75% by the fall. So this will further, put pressure on affordability, and especially in those expensive centers because of high prices and therefore larger mortgages. They're a lot more sensitive to higher interest rates. Or clearly, the expensive markets are going to, or buyers in the expensive market are going to face even tougher challenges in the period ahead. And those in less expensive markets will see some challenges as well, but obviously not to the same degree as expensive markets like Toronto, Vancouver, and Victoria.
We are starting to see house prices come down a little bit, but I was speaking with a mortgage broker on the show just a couple of weeks ago, and we were doing a comparison, between mortgage costs in January and house prices then, and mortgage costs now and house prices now. And it's more expensive now, even though house prices have eased off. How far do house prices have to fall in order to make this equation a bit better, a bit more affordable?
Right. It all depends what we mean by affordable. If you want to have, like in Toronto, Vancouver, or even Victoria, to make it as affordable as in other markets, you're probably owners in those markets probably don't want to hear the answer, but that would be quite significant.
Yeah.
But certainly our view is that because of affordability pressure and building further period ahead. Now, the start of downward price pressures that we've seen in parts of Ontario and some parts of BC are probably going to intensify to a certain degree and will probably spread to other markets as well. So our call is benchmark prices probably declining peak to trough by about 10% nationwide, and probably more so in Ontario and BC.
Okay, I mean that's not a lot in the grand scheme of things, 10%. So where
right.
where would that put affordability then?
Well, still very stressed in the high-priced markets. So no, I would not expect no major relief for buyers in those markets. But that being said, for the more affordably priced markets, now there might be eventually a little bit of a window there. But no, I do not expect a major improvement in affordability across the board in Canada in the near term.